Good morning, everyone. Welcome to the Flow Show. A new week kicks off, and here we go again with the trading. Welcome again to the folks from Eightcap who are joining us for the Flow Show. We're here all week. You guys are in Mondays and Wednesdays here on Eightcap, but we're here all week. So if you want to come and join us all week, please feel free to do so. We're going to kick off with our usual look around the board of various items, news that have come out, data points and everything, just to get a bit of refreshed of what's going on in the world, geopolitics, the fundamentals. We're going to start, as we often do, in China. Cases are rising over there again, COVID cases. There's more areas being locked down now. There's a large tourist resort that's been locked down. No one allowed to go there, and some hotels and venues are putting people through tests, and if they've not had first-person contact with COVID people, they're being sent home with full refunds. Others are going to be locked down where they stay. COVID cases are at the highest since May. Official numbers put that at 500, which seem relatively small and insignificant compared to the rest of the world, but obviously China is going through their zero COVID policy, and any little pop-ups in infections and boom, they lock it all down. So we're getting more lockdowns coming in China. We need to keep an eye on that. At the moment, they're just keeping it to little individual places. So we're not getting huge wholesale, not the whole of, say, Shanghai shutting down, but they're keeping the populous areas closed in certain areas. We need to watch to see if that spreads. We did get a bit of news out just before the show started, in which a sources piece from Bloomberg saying that China may offer waivers to mortgage holders who have mortgages in failed property projects or delayed property projects. They allow people to buy into these new housing projects or real estate projects. And some of those that have hit troubles and have paused, obviously people are still paying their mortgages on them, and it's creating a bit of an issue. So they may bring in a waiver where they put in a mortgage holiday for these people, and therefore if they don't pay their mortgage, they won't incur penalties. It just again shows a sign of what's happening in the property sector over there. People getting very irate that they're paying out money for projects that have stalled. Plus, we've had a few other headlines about they're going to be supportive of the economy, but it's not at the moment looking like it's going to come through huge changes in monetary policy or rates and things like that. It's mainly to do with potentially fiscal stimulus, infrastructure projects, pumping money into the economy that way. But that sort of chatter is still ongoing and still rising. It can give a small boost to currencies like the Aussie dollar and to risk trades overall. But as we know from a lot of infrastructure spending, it can only create short, sharp activity jumps, which then fade out over time. Or indeed, these infrastructure projects can last, be planned over the next 5, 10, 15 years. So it's a long-term road to increasing activity and providing that sort of stimulus. So not necessarily immediately market impactful. Moving around the world, we've got the ongoing circus in Italy politics. Over the weekend, the two main leaders in the ruling coalition, Lega and Forza, said they cannot back a government that's got 5-star in it. So a bit of a bum fight continuing there for Draghi. He's in the middle of a mix there, winning the confidence vote last week, then handed in his resignation being refused, being told to go back to Parliament and try and ascertain and get a government that's solid. But the two opposing leaders, Lega and Forza, are saying they can't work with 5-star anymore. This means that Draghi, potentially in Parliament, and it's been touted for Wednesday, may need to put forward yet another confidence vote, or even he tries to resign again. Between now and then, there's probably going to be a lot of horse trading going on. So far, the market in terms of the euro isn't really paying any attention. Even in bond spreads, not seeing a huge lift in Italy. We've been higher obviously, as you can see from the chart there, but we are just starting to see Italian yields ticking up a bit again. One thing we look at that my colleagues hot and looking at is the Italian-German spread, to see if that's getting in those what we call danger levels around the 2.3, 2.4, 2.5 point mark. That chart there you can see on the screen is that yield spread. It's shown as a percentage, but it's actually basis points. Obviously, with the ECB on Thursday and probably a lot more talk on their fragmentation tool, this is one of the areas, Italy, Germany, where that potentially may put that frag tool to a first test. Lots to come on that, obviously, from the ECB, but we'll hear about that later in the week. Moving across to the US, now the Fed, we've had a lot of eyes watching this reporter at the Wall Street Journal, Nick Timiraos, because he's now supposedly the new Fed insider. And he had a piece out over the weekend saying that it looks like it's 75 basis point hike for the Fed. Now, reading the story, it's not so much a big drop, big bombshell. He's pretty much reviewing everything that prior Fed heads have said and come out and said. Obviously, last week we got Fed's Waller and Bullard, both of them saying their base cases were 75 pips. They are two of the most hawkish at the Fed. The only door opening, if you like, was from Waller, who said that he would potentially entertain larger hikes if the data was very strong. He was pointing to retail sales. Those came in okay on the data front, looking at them last week. No shocks there really in the retail sales. As you can see on the calendar, 0.8% versus 0.3 expected, prior minus 0.3. So a fairly decent beat. But a lot of people have been looking at what's called the real retail sales or the adjusted retail sales, and they were negative for the second month running. So while the market may potentially focus on these headline numbers, there are those who are looking underneath the details, obviously things adjusting for inflation and so on, showing that real sales were actually down. So based on that, you would think that it's going to be in the 75 pip camp. Pretty much all the other Fed heads are in the 75 pip camp. So it's not going to be a shock if they only hike 75 pips. We have continued to see the fallout from last week where we got those 100 pip expectations ramping higher, particularly after the Bank of Canada. They've taken a big dip back, basically on all the Fed heads coming out and priming 75 pips. Some of the other news, staying with the US, Biden obviously had his trip to Saudi Arabia. Nothing going on there really, fist bumps and handshakes and big talk, but nothing really coming out of it in terms of securing bigger oil production. A lot of comments along the lines of, yeah, we'll try and do more, but. So nothing much out of there. Sticking with oil, we got this ongoing Nord Stream maintenance issue going on, which was running from 10 days from the 10th, 11th, and that's due to finish or be completed on the 20th, also, as I mentioned, ECB day. There was this issue with this particular maintenance piece or pieces that were in Canada getting fixed and being shipped over to Germany, I think it was, to be reinstalled. That shipment has taken place. Gazprom originally was saying that they hadn't received the paperwork to allow these parts to arrive. That's all been cleared apparently, and this part is getting shipped. But the market is getting itself, a bit worked up about this 21st date and whether this pipeline will come back online after. So one to keep in the mix as we go forward this week. Just looking back at some of the other data from the US, this was something that Fed's Powell highlighted, the Michigan survey. Not often a big number, but right now it's gaining importance, particularly for the inflation expectations. Now, the headline number overall had a little bit of a bounce, still looking very weak, multi-year lows, etc. but the inflation expectations pulled back slightly. The 1 year pulled back to 5.2% from 5.3%. The longer term 5 year inflation's pulled back to 2.8% from 3.1%. So a bit more of a pullback there in the inflation numbers, which again took some of the heat out of the 100 pip calls, because the Fed will want to see inflation expectations coming down so that consumers don't start changing their spending habits based on what they think inflation may be. Looking around some of those there as well, we did get the Empire State Manufacturing, which is the first manufacturing number of the new month. That showed a pretty decent bounce as well. There we go on the calendar. 11.1 versus -2 expected and a prior of -1.2. That suffered the last 2 months running, seeing really bad numbers. So a bit of a bounce there. It's a small number, but it's the first of the month, as I say, for manufacturing. Then really fed, and then we start entering into some of the main numbers. So just a quick look ahead at the calendar before we jump into the prices, and I'll bring my colleagues in. Looking at the calendar this week, obviously the two key central banks are the Bank of Japan and ECB on Thursday. Today we get some data, just some of the minor numbers from the housing market index. Tomorrow we get the UK labour market report, which could be fairly significant for pound traders to see how the jobs market is ticking along there. In the Eurozone tomorrow, we get the final number of HICP. I think we all know where that's going to come in at. I doubt it's going to get any weaker. And then we start some of the main US housing number for the month. We get starts and permits. This was pretty soft last month and for the second month running, so we need to see, are we going to hit a hat trick there? Into Wednesday, we've got some German PPI, UK CPI for the Bank of England, that one, to see what comes from that number. Are we going to see the shooting into 10% or higher in CPI there? Again, very unlikely that this one comes in softer. Will be a shock if it does come in softer. Eurozone consumer confidence flash, not usually a big number. It's been positive probably 3 times in its entire history. So it's just going to be a case of how much will it suck this time around. Then we get existing home sales for the US. Moving into Thursday, as I mentioned, we get the two big central bank meetings. The Philly Fed manufacturing, again, another look at the US manufacturing sector there. Into Friday, UK retail sales. This will be for June. So potentially a bit of a bounce there based on the Jubilee celebrations that we had here in the UK in June. Could have given retail sales a little bit of a boost, which may buck the sourness that everyone's thinking around the UK at the moment and the economy. Then we get the flash numbers starting in the PMIs for the Eurozone on Friday as well. Not a lot for the rest of the calendar day in Friday. That's it. We get the PMI flash from market, S&P Global on Friday from the US as well. So I hope that's covered a lot of the events that's going on. And morning to Kay and Stel, sailing nicely in the sun, no doubt.
Hello, everybody.
How are you guys doing? All right?
Yeah, pretty good, thanks.
All keeping cool? Kay, you're keeping cool in this weather, sitting there with your feet in a cold bucket of water?
Actually, Southwest England in the evenings, we have a pretty cool breeze, so it freshens quite a bit in the evenings, even though it's warm during the days. But no, everything's good, man.
Yeah, cool. Yeah, I was down the beach yesterday evening. Seems to be the best time to go down, about 6 o'clock, just as the heat comes off, a nice cooling swim. Just for all our analytics folks watching on Zoom, just a reminder, it seems there's still issues with the chat function. We are monitoring the Q&A section, so you can put your questions in there if you want to ask everything. Apparently it's due to an update in last week, so please make sure you've got the latest version of Zoom, or I'm not sure how you activate it via the Zoom app or web app or via the web browser, but please check your settings to make sure you are on the live version. Right, so So let's crack on with what we're getting into today. We'll start with euro dollar, and we are seeing a very decent bounce off of that parity level. You know, we had a lot of that indecision last week. Friday in particular, you know, we had the break under. Now more and more looks like a false breakdown there. Support coming in again just ahead of the level after that break, and it's pretty much been one-way traffic up. Now I'm a bit cautious. I was expecting it on Friday. I turned bullish euro dollar. Unfortunately, I dipped for a tick down at the lows here. I was bid at 0.5 and it got down to 0.7. Then I was bid at 20 after we made a move high. I was hoping to get myself into a long over the US data if it was good. That didn't happen either. So I'm been standing on the dock waving goodbye to this shit for the moment. I'm a bit cautious about how far we may bounce here. Coming off such a big level, as I say, on Friday, I was expecting the price action was just telling me that we're going to be due for a bounce. And I mentioned in the room, I wouldn't be surprised if we saw 101 on the close or by the close Friday, and we got up to 97 or something. But we've had the break above 101, and it's looking pretty at the moment. But just to put that into some context, here's the fib of this last phase down, if you like, coming from near the end of June. I don't often put fibs in such short term. I like my fibs over, you know, a longer time frame. But 102 is the 38.2 fib of this particular phase. But again, just to put that into some context, if we take it out a bit, look at that in the context of the move from the 122s, you know, back in mid 2021. You know, we're still talking very, very small steps. Even if we break these fibs up, you know, the big level still is around 103.40. So intraday, good moves, good prices, good levels if you want to catch it. But does this mean we found a bottom in the euro? I'm reluctant to think that's the case until we start breaking some of these bigger levels. 103.40 will be one of the key ones, or is the key one from here. That was the big support point on the way down. Thus, I expect it to be a big resistance point on the way up. But in the meantime, if you're trading more short term, you know, these are the types of levels you want to look at in the fibs and where the prior support and resistance levels were. Kay, Stel, you got anything you want to add on the euro area?
I want to say one thing about the euro, which I wrote on our chat with my ForexAnalytix this morning. I think now we have a very clear range that I'm going to be trading anyway, and that's it's a little bit wide, but you know we have the lows, the parity, and then we have 103.5. So basically, we still have about 200 pips away, but that range, if we break above 103.5, then that makes this whole excursion below 103.5 a false breakdown, and that can be a very, very bullish signal. So I'll be looking at this. I know it's a wide range, parity to 103.5, but this is the range I'm looking at. That's what I'm going to play. I think if we get near 103.5, it's going to be a really good risk-reward short, but with a pretty tight stop and a very disciplined stop, let me put it this way, because if it does break above, I think it's game over for shorts. So that's the range I'm looking at the moment.
Okay.
When you talk in here, don't forget to unmute your receipt as well.
Oh, okay.
Okay, can you
Yeah.
hear me better now?
No, I could hear you here on Zoom, but the people on Restream weren't hearing.
You're all clear on Restream now. Yeah.
I'm sorry. Sorry.
Yeah,
That's
for
right.
me, there's a couple of things happening, and we've spoken about that on Thursday and Friday. Thursday, actually, I was saying like this could be the last real push for the dollar, because we saw cable, Aussie, well, you name it, all the dollar pairs were doing highs, the other currency lows, and then we stabilized and started to go the other way around. So there's two things, in my opinion, that we need to take into account. Is that we overblown the Fed expectations, going from 75 to 100 BPs, but that seemed to have been the last push for now, which I tend to agree with, that we are going to have to wait a little bit, in my opinion, to see what's really going to happen. And then you have, for the euro in particular, since we are looking at that, the euro in particular, the Nord Stream thing. Now I'm just seeing that the turbine that Canada has been sent was supposed to be only a replacement part meant for use in September. So I don't know whether that's going to have take away a little bit of the hopium, but for the time being anyway, the dollar is correcting, at least, let's put it that way, and the euro is getting a little bit of hope from this Nord Stream adventures or saga. So yeah, I'm relatively neutral. I think the rebound could lead a bit further, as the positions were probably a bit stretched in favor of the dollar and need to be adjusted. So I wouldn't be surprised if we see 102s or so, and then we'll move in the second part of the week, where we have this combined ECB Nord Stream decision on both, or possible decision on both. And if the ECB does 25, I don't think it's going to send the correct signal. If we get negative news then on Nord Stream, that could really send the euro back down into the dungeon. And so I'm going to be really watching the second half of the week, what is going to happen for the euro in general. We could have the opposite, obviously, and that ECB finally sees the light and does 50, and the Nord Stream gets back up, and then I think euro could be trading a good few big figures higher. So for me, the second part of the week is going to be the important part.
I agree, and I want to point something else out. We are, how shall I put it? There is a potential but big binary event that could happen any day, and that's some kind of a ceasefire with Ukraine. So we have to be aware of that, even if the details are not, let's say, good or are not so constructive. If there is any kind of ceasefire, the euro is going to explode higher, and probably risk happens as well. So you have to remember that this is something that could happen on any day, and that's going to move things quite a bit. So we could get the double whammy of good news from the Russian front, and the ECB finally realizing that 25 base point hikes are not going to do anything for this inflation situation.
Yeah.
The thing is, though, quickly to reply on this Russian situation, is that Russia said Thursday or Friday that they were ready to have some kind of negotiations, but then when you look at the conditions for the negotiations, they are exactly the same as they were on day one, which Ukraine absolutely could not accept. The disarmament, the non-NATO, the whatever you want. All those conditions are still pretty much the same. So, but yeah, I mean, you're right. If there is a ceasefire at any time, this is going to be extremely positive for the euro. So we could have a triple positive whammy, if we like, on Nord Stream, ECB, and a ceasefire coming up. But it's all still fragile, in my opinion.
Yeah, and one of the reasons why I was turning a bit bullish, or not so much bullish, but non-bearish, let's call it that, on the euro, is because it's ECB week. We could well see some of the shorts that we've been laying in, since that move down from the 105s, just taking a bit of risk off the table, a bit of profit taking. The ECB, whatever the expectations are, is a risk event, and traders can sometimes just clear the decks until that risk is passed, so they know the outcome, and then we get a move again. So I'm not ready to go balls deep bullish on the euro just yet, but as we say, watch the levels, let those be your guide as to what's happening. If we get up to somewhere like 103.40 just into the ECB, we get positive news, maybe they hike 50, but we can't break that level, then that's going to be a surefire signal that this euro move isn't done yet. Conversely, that's going to be a level. If they're negative, it's going to put a solid resistance level potentially in there. But anyway, looking around some of the other pairs, and again, please, if you want us to look at something in particular, or if you have a view on something, please pop that in the Q&A and we'll get round to it. Just sticking with the euro at the moment, because it is a bit of a euro story, or was a bit of a euro story this morning, particularly. Seeing a strong bid in a lot of euro pairs. You can see, euro sterling had a move up. This came around 8 o'clock in the morning here in the UK, which can be a time sort of 7:30 to 9ish. Can be a time where you see the models cranking in for the morning, and you see a bid programs or buy programs going through in certain currencies. So it did look a bit modelish, or as we like to call it, the 8 a.m. man this morning. That's back down. I've been watching this zone in euro sterling. As you may be aware, on the way down, we came down to this zone. I did try long into that zone and got stopped out. I completely missed this move here. Don't ask me why. But we're back mooching around this 84.80, 85 zone. We can't hold a break above it at the moment. Bit of sideways action, a bit more indecision. Again, this is going to be one, if the ECB disappoint on Thursday, this potentially is heading much lower, because that puts the ball now into the Bank of England's court in terms of hiking rates. They potentially are going to go 50 at the next meeting. That's a higher expectation there. So again, the policy divergence would open up wide or wider, and that could put further pressure on euro sterling. Obviously, if the opposite happens and the ECB are hawkish and the Bank of England only go 25, that gives some scope for further upside for euro sterling. Obviously, playing in the middle, if the ECB go 50 and the Bank of England go 50, it's net zero, if you like. The ECB may take the lead here in terms of the size of the central bank and the amount of countries they look after, may just edge euro sterling to the upside, but in real terms, it's a zero-sum game. So I wouldn't expect euro sterling to do an awful lot. Kay, you've been looking at euro yen a lot here. You got some thoughts on that? And I've been chatting about it.
Do you want me to grab the screen for
yeah, go ahead, mate. Let me knock it off. When
let me.
Yeah. And that one.
Let's see.
Yeah.
Okay. And I have to do it on the other one as well.
Yep.
There we go.
Yep, all good.
Okay, so last week we had on a little shorter time frame here. Last week we had this zone here in the 139 3/4 85, which has been, I don't know for what reason exactly, but which has been a real traffic zone every time we came there. Tops, bottoms, bottom, here again, trying, and then finally this morning, and I think this was helped by the global feel better environment, and also the euro yen, since we've done the 137, has been gradually trying to crawl up. So this morning I tried a long on that one, and it's holding in this little zone. Which resisted up to now and up to the end of last week, and it's not even meant to be like a longer term or medium term position, but I found just this level being broken quite interesting this morning, on the back of a bit of hopium for the Nord Stream. For the Nord Stream situation on the one hand, and on the other hand, when we look around the commodity sphere, we have again, like copper is higher, most of the commodities are higher, gold, silver, gas is higher, and that should weigh in theory a little bit on the yen. We had our short play on the dollar yen at the end of last week on the heightened warnings that we got by the MOF people in calling for that they noticed or they have seen speculative moves. So we had a big figure move down on the dollar yen on the back of it. I covered that this morning because I mean, if it's only staying at a warning stage for what is going around in the rest of the spectrum, yen spectrum with higher commodities again, interest rates elsewhere not really going down anymore. It should weigh a little bit on the end. So I was playing off that level. It's really a short-term play. I think if we can get through this 140.60, there is a chance of a revisit in the 141. So as usual, I bought it ahead. I've already scaled back a little bit, so I've put my stop for the time being around at 139.65. I should put it perhaps under 60, but I'll see what happens later. But it's already a free trade because I've been trading this around. This is exactly what we are trying to do. If we're doing shorter term trades, try to get into a kind of a free trade or diminish your risk as soon as possible. It's not exactly the same on medium or longer term trades because we do a lot more of scaling in and the risk levels are further away. But on the short term trade anyway, I always try to get my risk down or close to zero as soon as I can, which is happened already right now. Yeah, so I was saying on the euro dollar, as Stelios also mentioned, this is the 103.40.50, the last break where we violently broke below. So this is the level that Stelios is watching exactly there, which is the breakdown level. But sorry about that. I think in the meantime we have to look at and respect on the shorter term. We have to respect the 102.05.15. I think there's another one here around 102.75 before we can talk about those levels. It's been a positive this morning that we have broken above 101.20.30. This 101.20 was the previous rebound high. So that's a bit of a positive for euro bulls or people having a long euro position. I'd watch that one on a close of a day. If we get back below 100.80.90, it might be already over. But in the current context, I wouldn't be surprised, as I said, if euro bounces a little bit more. On the cable, I think we're in this. We've been building on this downside wedge. We haven't really tested the low, but there was like a bit of an extension around here as well in the 117s. And now we are back on the first resistance zone here, 119.75, I'd say. And then watch this descending trend line comes in at around 120.20, and I would say above there it's probably gonna be a little more here, 120, 123.75. I think the bigger breakdown here was this 121.55, 55.65 that I had been watching for a long time as well. So watch this zone if ever we would get there, but that's still 180 points, 180 points from here. First of all, we have to clear 120.20 to talk about a larger rebound. A lot of it is dollar driven this morning. The stretched dollar positions, more people calling about a slowdown starting to appear, but then it didn't really appear in the numbers. I think it's more like we had this final push at the end of mid last week on the dollar. Positions got a bit stretched, and now we are correcting or stabilizing a bit. Moving on to another one is I don't know if there's really a lot of interesting levels on the short term in the dollar yen. I would say 137.25, 137. Sorry, the figure and then we're starting to look at a bit of a double layer here around one. That's already in the 135s. 135 low one mid 135s to low 135. But I want to have a look at the metals as I'm usually doing. Gold is it's trying to hold. We haven't so far seen those 16, 70, 80 lows, but the rebound is not as spectacular as one would expect on a market that would like to sell dollars. So we are on our first resistance here. And as I was already saying many times, to me, it really should start to move back above 1750s and ideally through 1770, 75 to really get more optimistic on gold. We're in an interesting zone here on silver. I think it's already positive that we are back into this longer term triangle. But then zooming in, I think I'm a little bit positive again. As I said, we are back above the lower trend line. We're back, and now we're back testing some resistance here around 1895. We're absolutely right on it. If we get a close above, let's call it a close above 19, it should look a bit more positive for this one. But then we are going to need a bit of support from economic data, as well, as I've been saying many times on silver. But already a close above is I'm a little bit more optimistic. As people know, in our room, I've been buying around. Well, I've been buying on the way down and then selling back on the way up when I'm got some profit. So I'm having a pretty decent average now on my add-ons longs, but I'm still not completely full whack long in silver. I think it could be a bit early unless we get back above 1935.40, then I'm going to get a lot more optimistic on it. Quick look on the emerging markets. It's been a very interesting one on the MEX. We tried to break above this 2090 zone, went into this 2103 resistance last week, but have a look. We've never had a close above this resistance line, which makes it interesting. And then we had a violent setback, and we are trading now well back into this channel, which where the top line comes in at 2055. I might give it a go there. Try a short again if we get back up there. There is room to actually go down, in my opinion. And there's now starting to be decent resistance anywhere, every like 10, 15, I don't even know how you call it, cent or so, back up to 2090. The other one, which I'm still in, as people know, it's a long-term one, and I still think there is a chance we are going to get a visit of the 20 zone sooner or later, is Euromex. We have well respected the trend lines. Unfortunately, didn't go back into my resale zone. But anyway, it's still looking good for a move lower. I think next stop could be around 2030 or so, unless we get what we are talking about before, unless we get this double or triple positive whammy for the euro on Nord Stream, a possible ceasefire in Ukraine, and ECB doing bigger things than what they've said themselves. This being said, MEX being a real high yielder, if we see positives for commodities, MEX could actually benefit. So I'm not sure if Euromex could go much higher than this zone, but we will see later in the week. I will decide probably upon whether to add lower or to cut back. In the meantime, as usual, I've been scaling back a little bit this morning, hopefully for a return, perhaps up to 2080 or 2090. I'm just trading around what I have in my core shorts. The S&P 500, we are. I'm respecting this trend line and then this upper one, and in the meantime, we have seen a very good rebound on positive vibes in the market, and the market probably being short. Once we've broken above the 38.25, we made a quick move up here. I think there's going to be some interesting resistance coming up anywhere between 39.20 and 39.30.40, up to this 39.5. This is going to be an interesting zone in the immediate neighborhood. If we crack that, we could have a look at the 4K again, which is going to be a psychological level. But it's all a bit conditional right now. Positive vibes to start the week, so there is a possibility that we have a look or a crack even of this level and go for 4K. But will it last? I'm more in a rangy kind of feeling than really we have seen the top of the dollar and we go the other way around and all assets are going to fly again. I think it's too early to make this kind of or to come to this kind of conclusion. And with that, I pass it back to you, Ryan.
Thank you very much. Let's see. So let's grab that first. And that second. There we go. Yeah, thanks very much for that, the K-Meister. Just one pair I want to look at. I've just been knocked out on a trailing stop in $1. I've been playing longs off this area down here in the 660s and a half, just because it's been a pretty decent support area. Made me work hard for it. I've been waiting for this move here, this sideways action to break. We got a break last week. I knocked a bit off. The highest I've knocked off is 6.7750, but we have once again found a bit of a top up here, around 678.79. Did have a little nudge through again. You know, we've seen these overshoots now in a lot of pairs: euro, dollar in parity, cable below 118, etc., etc. This looks like another overshoot here. I was looking at potentially reversing to a short, but I didn't. I thought we might be getting a break up here, going on the news in China. But for now, I've just been stopped on my trailer on the longs from down here. So I'm going to go back to neutral and see what develops between these edges here. If we get another move up here, maybe look towards trying to short potentially with a reverse if we do see a decent break. Otherwise, shorten into here to see if we get a move back down to, this 668, 67 area for that one. I guess this week mainly for me is just about seeing, how we're going to fare ahead of these big risk events. Kay's mentioned the Bank of Japan. I'm short as well in this one. Just took a small short on Friday after the comments from Suzuki, which were a step up in the rhetoric. I got in bang on the headlines as the folks did that live actually while we were in the middle of the show, and I tossed that out because 5 minutes had passed, 10 minutes had passed, and there was no further follow through. So I took a 7-pip loss on the short there, but then I had the itch, so I jumped back in pretty much the same level, and I'm still in the short there. I've cut some from the 70s that I got in down at 09. Got my trailer just 15 pips behind my entry at the moment. So I'll give a few back if it does get stopped. But if we get under 137 and we've had a move down to sort of some of this prior resistance point, we've had a move down there, and that's where support is showing up. So again, on the short term, these are the sort of levels I'm going to be looking at to see, are we going to ping pong between the range? I've mentioned prior action, we've had similar moves like this where we get a move down, we find a bit of support, then we come up and crack the level. So again, just looking to see what ranges develop between the highs up at the 139.40s, maybe down to the 139, 0010, 137.89, 85.90 down here is the support area. Crack below that, then we start looking at the smaller areas. But overall, just like I mentioned with the euro dollar, the trend really hasn't changed at all. We get these minor pullbacks, and while they don't go too far, it's refreshing the trend really, and gives it a reason to carry on up. So really, it's just, for me, the start of the week is just seeing what develops. I don't want to chase things like euro dollar, and I think that's important for traders who, we had all this action down here. It was big. We've been focused on it all week. Huge price action going on down here. This is the type of thing you look back in 6 months' time and think, wow, what a bottom that was. But you don't want to start chasing things here. You want to be careful with the dips. Look at your support levels. The support level is going to be down into the mid to low ones, if you like. If you get a dip down there, that's where you want to be potentially looking at for longs, at least in the short term. But bear in mind, we do have the ECB coming up. I saw in a chat, Andrew was looking at cable at the 120, as Kay mentioned. Yeah, we've got these levels coming up, 120, 150s odds going up. 120 is going to be maybe a bit of a decider in the short term. It's the Euros 103.40, if you like. Big level, always a psychological level. We had a bit of flip-flopping around here, but then we got a break below, held below, and it's been one way ever since, bar minimal bounces. How it reacts up here as 120 is going to be very important. If we can't get above there, it keeps this range in play, certainly from 118 up to 120, which 200 pips is a fairly decent range to play in cable. It may be worth looking at going with a break on that one if we see signs that it's breaking well and we get confirmation that it's holding that level. Then we can push on higher. Just to go back onto the issue we've got with Zoom at the moment, seeing some of our people saying that they have updated Zoom but still no chat. That's a bit of a conclusion we've come to as well. So we will look into that pronto to see what's going on there. Maybe it's changed a setting in the back end that we don't know about. So we will have a look at that and get that resolved, because it's very important that we hear from you guys and girls. We want to hear from you folks to see what's going on and get your input into that. Just briefly as well, while we're here, just want to mention to the folks at Eightcap, if you do want to come and join us on the show during the week, we are running live every day. You can do so. Come to ForexAnalytix.com, look for the webinars tab, and you'll find the link. Come and join us, register for the show every day. And if you do want to come and join us on ForexAnalytix platform, where you can get hold of lots of technical analysis goodies from all the team, myself, Blake, Dale, Gregor, Kay, Stelios, Steve, Amanda, Paulie. We've really got a huge stable of analysts and traders, more importantly, who are live day to day. Come and join us. You can do that there via forexflow.live/platform, where we offer you an exclusive 20% discount on your subscription. Unless any of you guys and girls have got anything you want to check with us, I haven't got much. One thing I will just mention quickly, because I'm seeing some headlines coming up from Bank of England Saunders. We are obviously in the midst of the UK leadership race after Boris's resignation. The numbers are getting whittled down, but one of the items of news we had over the weekend was from one of the runners, Liz Truss, who said she potentially wants to look at changing the Bank of England's mandate, particularly over how they counter inflation, and they want to move, or she would preferably move to a system where money supply becomes the main tool for inflation and controlling the money supply. And Bank of England Saunders has reacted to that just in the last few minutes, basically saying that the foundations of UK monetary policy framework are best left untouched, and that it's important that the Bank of England remains independent, and that the government does not set the direction of travel for monetary policy. So a bit of a pushback there against that comment from Liz Truss, one of the runners. You know, it's potentially could get a bit messy, but because if Bank of England are now going to start reacting to everything that one of these contenders says, even though they may not become leader, it may start to put some pressure on the pound if the news is negative, or if some of these other runners start coming out with other comments that potentially upset the balance of what the Bank of England can do. It may be taken on a sour note by the market in terms of meddling. You know, the Bank of England is pretty independent, and the market respects that as well. But anyway, we shall leave it there for this morning. Thank you to Kate and Stellis for joining us, and for the folks at Eightcap. For the rest of you guys, we will look into this issue with the Zoom problem, get that fixed as soon as possible. Apart from that, I wish you a very prosperous week ahead. Stay cool if you're in the UK and Europe amid the heat wave, and we shall see you tomorrow. Thank you very much.